It's always a great time when we have Mr. Tilewa Adebajo. The Central Bank of Nigeria has held its first monetary policy meeting for 2025 with inflation pressures, a rebased consumer price index, and the new financial policies all in play. All eyes were on CBN's next move. And will the MPC tighten, hold, or ease monetary policy? Ikechi Nana tells us more.
The Central Bank of Nigeria convened its 299th Monetary Policy Committee, the first of 2025. Now, after a series of 6 consecutive rate hikes back in 2024, here's what the bank decided.
The committee was unanimous in its decision to hold all parameters.
This decision comes on the heels of the National Bureau of Statistics releasing the rebased Consumer Price Index, which adjusted the headline inflation rate to 24.48%, down from the previous 34.80%. The recalibration provides the MPC with a fresh perspective on price stability, influencing their decision to hold the MPR steady.
Retain the MPR at 27.50%. 2. Retain the asymmetric corridor around the MPR at plus 500 to minus 100 basis points. 3. Retain the cash reserve ratio of deposit money banks at 50% and merchant banks at 16%. And 4, retain the liquidity ratio at 30%.
The committee seems to be playing the long game, betting on recent macroeconomic improvements to do the heavy lifting. But food prices are still a major concern, and the CBN is banking on improved security in food-producing areas and other supply-side measures to bring down those numbers.
The committee noted the recent rebasing of the Consumer Price Index, CPI, by the National Bureau of Statistics, NBS, which reviewed the weights of items in the consumption basket to reflect current consumption patterns. The committee further noted that as the federal government continues to improve security in food-producing communities, supported by other measures to enhance food supply, food prices are expected to continue to moderate. In the view of members, the new base year and reconstituted consumption basket represents the current economic realities.
The Apex Bank is also patting itself on the back for achieving stability in the foreign exchange market.
The committee highlighted the benefits of the improvements in the external sector to exchange rate stability, including the convergence of rates between the Nigeria foreign exchange market and the Bureau de Change, and urged the bank not to relent in its effort to boost market liquidity.
The Central Bank of Nigeria will continue to monitor domestic and global developments to identify emerging risks and propose policy responses to mitigate the impact to the Nigerian economy when the MPC meets again on May 19th and 20th, 2025. Ikechi Nana, Arise News, Abuja.
So much for that, Ikechi. So let's come straight to you on it. Monetary policy now, rates held. You also want to talk about Forex situation, some stability in that, and a bunch of other issues.
Yes, I think the good morning anyway, by the way, everybody, and good morning, Dr. Killer, new face on the show. Anyway, like I said earlier, I think the holding of the rates, I think, is a welcome development. And the reason why is that I think it's important that the central bank takes a look at the view, because they're leading and lagging indicators in economics, and inflation is a lagging indicator. So I think the stance to be able to hold, because the cost push factors, which is the fuel price increase and the foreign exchange devaluation, is what has been driving inflation. So I think if we look at it over the next 3 months, I think it will give time to give a clearer dynamics on the situation of the economy. So I think in that case, I think it's a welcome development. But on the other side, I think on face value, I think what is important now is the fact that real rates are positive in Nigeria, as a question of the fact that interest rates are higher than inflation, and so that we have value with financial assets and within the financial markets.
All right, thank you very much. So, well, the decision is to hold the rates, and a number of people, of course, welcome development for a number of sectors who have talked about how the hikes in rates have adversely affected. One, of course, is manufacturing sector. At what point would we see a potential decline in the rates? I think that's where a number of people are also looking towards, because this might be a factor of the rebasing, or the rebasing might have had an effect on this decision. But at what point would we begin to see a positive trend with regards to inflation following the interventions of the CBN?
Well, two-facet question. First of all, let's take a look at those issues when people talk about the rates. Monetary policy is determined by the situation in any economy. Mm-hmm. If you want to understand any economy in the world, go and look at their monetary policy. Monetary policy reacts to the situation in that economy, either as a corrective measure to be able to get the economy back, or as a reactive measure to be able to stimulate growth. So in order for us to stimulate growth, we have to go through a period of tightening, and then once we are comfortable, then we're fine. But as we've seen, there's stability now in the foreign exchange markets. The fuel prices have finally been determined after a lot of ups and downs and ups and downs. So those are the key two cost push factors that has been driving inflation. So now that we have stability and understanding of those rates, I think it is clear that in the next 2 months, the trajectory on inflation is downwards. And as you can see from what the central bank is saying, they're actually targeting single-digit inflation. But look, if you take a look at the charts in Nigeria, by the time inflation hits 12%, Nigeria will recover significantly.
Absolutely.
But Nigeria will recover significantly, we reach 12%. And we're talking monetary policy here. What are the things should we be looking at to really drive us towards that single-digit inflation, i.e. in terms of policy and government action and indeed the private sector, if we really want to get there? Because that's...
Well, first of all, let us take a look at government expenditure. The key problem we're facing now is government expenditure. If you take a look at the budget that has just been passed, there's a cumulative deficit of close to 40 trillion naira. And debt service is about 16 trillion naira, and we've hit a ceiling of debt of 150 trillion. This is clearly unsustainable. So what is important now is macroeconomics, I believe, is not as important anymore. What is important now are policies and the coordination of policy. We have, even if you have a good orchestra with very good players, but what is now required now is the conductor. Yes. And when you will need a conductor for the Nigerian economy that will be able to synchronize effectively monetary policy, fiscal policy, and what is even more important now is our trade policy. We need to review our HS codes. Our investment policy is sound, because we have one of the best investment levels here, but our business environment and our business climate is not what it's supposed to be. And of course, our industrial policy, we need to review it and upgrade it. And the question we need to ask ourselves is that we have many, many entrepreneurs in this country. Yeah. Where Dangote spent 20 billion on a refinery, Bua Abdusamad is doing the same, Otedola is doing something in power, so is Tony Elumelu, moved in power, and all these other entrepreneurs, just as an example. So where are the other entrepreneurs in Nigeria? For instance, there are 3 sugar mills in the ports, owned by Bua, Flour Mills, and I think Dangote. So the question now is, why have they not expanded to be able to start growing the sugarcane they're using in Nigeria? Why are they still importing the brown sugar? We've done that in cement, industrial policy. There was a deliberate policy by OBJ to say we're going to start manufacturing cement in Nigeria.
And that's what I was going to say.
Yes.
Do you think that the government ought to enhance or implement a policy that directs to do
Exactly.
that?
You need to be deliberate.
You're talking intervention. You need to be
Yes,
deliberate.
you need to be deliberate
Okay,
because
that's
that is what
I wanted to be clear
Obasanjo
about.
did. Obasanjo said, we are no longer going to import cement.
Yes.
And when I was senior technical advisor to the Minister of Trade and Investment, we got UNIDO to do a study for us to show that we now have capacity to produce locally. And that was what advised the ban on cement importation. So we need to be deliberate with our policy. Are we now going to take a look at saying, with sugar, for instance, all these guys need to start growing sugar in Nigeria? We are no longer going to allow you to import this sugar. You need to be deliberate and you need to act on that. So that is what we're looking at right now. That is what is important.
You're talking about policies on backward integration.
Yes.
Also, can we safely say that we've achieved that to a great extent in petrol, you know, a great level of backward integration by having multiple refineries, although there's still conversations about importation still going on?
Yes.
Then most importantly, let me scratch your brain on something as regards this money in circulation thing, which there's now the conversation around the fact that actually there's more demand for the Naira, you know, because of the devaluation. So the money in circulation is, some arguments from quarters that it's hitting at a level of equilibrium, but some people are also saying it's also a very fundamental factor increasing inflation.
Well, before you answer that, let me just wrap up that question, because the question we need to ask ourselves is, all our entrepreneurs, where is Dangote putting his next 20 billion? Where is Abdul Samad putting his next 20 billion? Where is Otedala putting his next 10 billion? Where is Tony Elumelu putting his next 10 billion? And all the other people, where are the next fintech people putting their next billions? Into what sector? And that is really where we need to be deliberate. As far as the issues you're talking about in money supply and devaluation, money supply is, you take a look, there are very many aspects of money supply. There's M0, which is the money in circulation outside banks, about 4 trillion, which is quite issue. But what is important now is the FX code. We now have transparency with the FX system, with the Bloomberg terminal and the FX code. The FX code was signed by the chairman of the banks, the managing directors, and the central bank. And I believe that what the central bank needs to do is not to be afraid to sanction banks, Bureau de Change, or anybody that messes around because they all signate. If we do that, the continued stability we see in the foreign exchange system is as a result of that. Transparency and accountability. People are signed up to an FX code. And all the Bureau de Change operators also need to know that they also need to be part of the system. They cannot continue to always add 100 naira on, look at, okay, they look at the market rate and then they want to add 100 naira on top of it for them to make a profit. Okay. It doesn't work that way. Okay. Everybody needs to have one system that we go, because you see, in terms of wrapping up, I think what is important for me to wrap up today is the fact that we have seen green shoots in the economy. Rig counts are coming up. The oil and gas, because of the signatures they've done, is undergoing significant amount of recovery. If we continue along these trends and we nurture the economy properly, I think that we might begin to see a rebound by the end of third or fourth quarter of this year in the economy.
Hopefully, and that's what we want to see. Like they say in social media parlance, Nakola boom.